Morning, everyone. Welcome to the seminar today, this morning, Saturday morning. It's a relaxed morning for all of us. I hope everyone at home and your near and dear ones are doing well. As we are slowly trying to get the better of the virus across the country, especially in Mumbai and MMR, there are obviously business concerns which are coming up into our minds. And there have been several conversations, side conversations about what's going to be the next 6 months, the next 1 year, maybe what's going to be the next 2 years. How is it going to be if there's a third wave? What happened last year was it because of the stamp duty? Was it because of anything else? And there are several questions in the minds of all of us, all the members, and thereby we thought we'll organize this session where we'll have experts and guests who have been looking at how this has been panning out for the last 18 months or so and share their views. I'm Pritam Chivukula, the Honorary Secretary and your host for today. And with me, I'm joined by our guests for today. Uh, they don't need any introduction, so I'll just welcome them. Welcome Anuj, welcome Shobhit. Along with them, we have co-panelists who are our President, Deepak Goradia, our President-elect, Boman Irani, and I have been joined as co-panelist, I should say, by all my managing committee members, all my respected past presidents. Thank you for taking your time out and being on this show today. Uh, the way we'll do this is we'll hand over the stage to the ANAROCK gentlemen for a few minutes. They will do their presentation and discussion, and basis that we will open up the floor for free-flowing conversation. We have a set of questions that are with me, which have come during registration, which have been formulated by the panelists. So I will start with some of the questions, and later we'll further open it up for Q&A amongst ourselves. The people who are not on the panel, all of our beloved members, please send in your messages as and when you think of it, as and when you think of the questions on the Q&A box, and we'll pick up the relevant ones which can be answered in a short period and throw them at the relevant panelists. Over to you, Anurag, Anuj, and Shobhit. Thank you.
Thank you very much, Pritam. Very good morning. Thanks, Deepak Bhai, for organizing this. It's always a delight to be amongst friends. We always enjoy discussing, and as Pritam rightly said, we'll just set the tone. And there are a lot more knowledgeable guys on the screen than Shobhit and me, where we're going to have free-flowing discussions. But we will put some data points so that we are able to refer to some of those data points as we go through the deliberations. Given Deepak, none of us have really seen these environments. What we are also putting in is our guesstimate, and what we have done this morning for the MCHI is we have projected and projected the demand going up to 2023 on the residential. So we've actually gone out and put a lot of our reputation at risk, saying is that we're not only looking at 21, 22, but we are actually giving a much more forward-looking statement as well, that where the residential sales and the other verticals are going to be. Shobhit is also going to talk about, as he is always the money man, where the money is going to come in from, and some of the new trends that we are seeing, 8 of those. We've also requested Rahul, who heads our marketing, because there's a lot of different things that are happening on the digital side. So Rahul is going to present 4 or 5 slides on what he's seeing the change on the digital side, given that newspaper and hoardings, etc., are not really as much in vogue currently. So that's what we have. I'm going to request Bridge, who's our IT guy, if he can project the presentation, and then we'll run through it. Our thought is between the 3 of us, we want to wrap it up in about 25 minutes. Pritam will send the presentation to you. It's very rich presentation. It has a huge amount of data. But for all the members, we're happy to share this data. So, my apology if we are moving a little bit quick on this, but we do want to have a fair amount of time left for the deliberations and the Q&As. So just very quickly, Bridge, if you can move to the next one. The first wave that we had seen in India was less about the health, a lot of uncertainty, economy, etc. This wave has been huge amount on the health side. But from an economic perspective, we're seeing is that the challenges are not coming as visible as what it was the first time. We extrapolated that and we said is what happened in the US. After the second wave came in the US, the resi sales went to actually a 14-year high on the velocity of sale and on the numbers of sale, 14-year high. This morning, I was looking at the New York Times and it said is the highest increase that they have seen ever in the real estate market in the US has been in the last 12 months on the prices. So clearly, there is a demand across the globe that is coming up on the residential, not only in India. It is appearing like from America to Australia, the demand for housing, which was a sector that was languishing in many of the emerging markets, has come back very rapidly. We're seeing that even in the UK, as the economy is opened up, there's a lot of retail demand that has come up. I'm going to touch very quickly a couple of slides on office and retail. Next slide, please. On what's happening in those markets. Just a very quick one. We are in this era of 2021 now. Real estate is obviously very regulated with RERA coming in. It is a very consolidated sector, and you'll see one slide on what we are saying about consolidation. You would have heard just very quickly one slide on offices, what's happening. And this is a very interesting slide. It summarizes what's happening on the office. If you look at 2019, this is calendar year 2019, nearly 4 crore square feet of leasing activity was done. So Pritam, in your last life, you would have seen these charts. So 4 crore square feet of leasing activity that got done. It was the best ever year from 2010 going forward. So very, very good year on the office side. 2020, honestly, I did not expect 2.3 crore square feet to be leased. I mean, I thought that it'll be high teens. So I thought it'll be 17, 18 million square feet, which is 1.7 crore, 1.8 crore. This is actually 2.3 crores. So done very well. And we are projecting that it is going to be better than last year, slightly better than last year. So 2021, 2.4 crores instead of 2.3 crores, which was leased out last year. Just before we started this session, we were just discussing amongst ourselves with the managing committee. And I was saying there's a new concept that I'm seeing on the office. It's called as not WFH, work from home. It's WNH, work near home. And I was just saying is we're seeing a lot of demand, NCR, Bangalore, Bombay, of 250 to 600 square feet carpet area, very small offices, used to be previously bought by doctors, advocates, business guys. These are now being purchased or rented by professionals who want to actually not work from home. So some of them are looking to upgrade their residences. Some of them are actually saying is that I want to separate more formal setup within 1 to 2 kilometer radius of their existing dwelling unit. That they're wanting to buy a house, they're working in an IT firm or a banking or a pharmaceutical firm. And they're saying is that we're just sort of struggling to work from home and hence want our own office because they don't expect that many of these organizations will open up their offices in the near future. Next slide, please. Why we're saying is this work, from home or sitting at home and working is not going to long-term work is, these are 3 slides. The right-hand one, we've taken that up from the Harvard Business Review. The left one shows the number of people in each household in India on an average compared to the more mature markets. So, we have the parents, the kids, the in-laws, the maid, servant, cats, dogs, everyone at home. 4.6 people on an average in a household. Such small homes, 504 square feet compared to say Australia or Canada, which are hovering around 2,000 square feet. And on top of it, if you look at the resilience of internet infrastructure and the digital platform is so low, the yellow dot that you're seeing for India is the lowest on the chart. And that's where our thought is that people are wanting to get into the into the offices. And whilst in more mature markets, people are happy to work from home. I think given the number of people at each dwelling unit and the size of our dwelling units, on top of it, the infrastructure on the internet, it's going to be difficult for people to continue working from home. Next slide, please. Just very quickly on the retail, I want to go 2 or 3 slides. Next one. On the office, we saw the chart. On retail, if you look at it, it's nearly 1.1 million square feet that was leased out. Last year, we're thinking about the same, 1.4 million square feet. This is net leasing, which means a lot of the people would have given up their space in the retail side, and this is over and above what they have given up. So this is the net what would have been taken up. Next slide, please. Some trends, what we are finding out, when the malls were opened up in January, February, March of this year, the top 25 malls, 80 to 90% of the footfalls and the revenue was back. High street did better than malls. Clearly, 80% of the high street was back to 75% of the pre-COVID revenues, and 20% of the high street actually went beyond 100% of the pre-COVID revenues. Interesting for the Mumbai team, a lot of demand coming in for retail below residence or office. So if you can build a box of 1 lakh square feet, it's superb. Gujarat opened up on Monday, the malls. From 7 a.m. in the morning to 3 p.m. We've seen a huge amount of activity starting to build up there. I was in Hyderabad on Monday morning, 6:45 a.m. I left the hotel, and we took a sort of U-turn from the hotel. On the other side was Joy Alucas and Dhanraj Jewelers. Absolute chock of block there. 6:45 a.m. full lights on, everything. And I asked our city head, I said, what's going on? He said, sir, 6 to 10 the markets open up, and there are so many weddings at this time, and all these guys are wanting to buy jewelry in these times. So I do feel is that retail is going to bounce back. I mean, they say YOLO, you only live once. So that is what you're going to start to see, revenge buying. I mean, I also read earlier this week, the richest man now is the owner of LVMH, because the amount of sales that have happened on Louis Vuitton after the lockdown has opened up has made him the richest man in the world. Next slide, please. The way malls will open up, and it's no rocket science, hypermarkets are going to open up first because they are big boxes, so social distancing can be maintained, followed by apparel, electronics, gifting. The last one is going to be multiplexes and the food courts. Next one, please. So we're now going to move to this, which is the most interesting part. 80% of the Indian real estate is residential. So there are 2 or 3 slides which are very important in this. Next one. One of them is this slide. I'm just going to take a little time to explain what it is, and also explain how the research team explained it to me, what's going on in this is. So if you look at the purple bar, these are the new launches that have happened across the top 7 cities in number of units. And what you see in the orange is absorption. I mean, it's a technical term of saying sales. That's what the absorption is. 2019 onwards, the market has been coming down. Really, Q2 2020 calendar year, which is April, May, June, there's almost very little activity. Look at it, how quickly we went back up. In Q1 2021, we actually surpassed Q1 2020. So our guys were saying is that we've gone ahead of the pre-COVID level, but actually it's a wrong statement to say that, because Q1 2020 had started to get the impact of COVID, because we saw that by the 3rd week of February, the footfalls were coming down, and by sort of last week of March, anyway, the lockdown had come in. But if you look at Q4 2019, and you'll see it on the next slide, Q4 2019, we're coming up to that level. What the research guys said to me is, Anuj, the way you look at your business this year versus last year. Last year it was a 50 over 1 day cricket match. First 50 overs COVID played, which was 6 months. next 50 overs, business played and business won the match. This year, it's going to be a boxing match. There will be one punch of COVID, you duck down. The punch withdraws, you get up and do business very quickly because there will be another wave. Pritam, like you said, it may be a third wave, maybe a fourth wave. So what they're saying, you have to be extremely nimble-footed. Those guys who are working hard at this stage, and when the lockdown opens up, hopefully, next week we start to see lockdown activity opening up, would be the ones who will really benefit, because that's when the punch starts to withdraw and that's when business comes in. And the thought is October, November, if the vaccination doesn't go the same way that we are thinking, there will be a third wave that is going to come in. And that's when you duck down again. And then you bounce back again. So it's a boxing match that is going to go on, not a one-day game that what we had seen last year. And hence this time, a lot of nimbleness of businesses are going to be required. Particularly during these times, the preparation has to be done so that if Monday it opens up, the teams are fully ready. And, it's like a car that's kept in the garage and you don't really see anybody else's car that is kept in the garage. Many people that we know are sitting in the driver's seat, revving up the car and ready to go. The moment the garage door opens up, they're going to be out there. Many are thinking there is no activity happening and nobody is doing anything. They have switched off the engine. They have taken out the keys. They have got off the car and standing next to the front door of the car. And when the shutters will open, they will then get into the car and then start the engine and then start to go on, by which time there will be another punch that is going to come in. Next slide, please. This is a comparison of how the supply and sales compared to Q4 2019 was. So if we were to look at MMR, we were ahead of Q4 2019 on the supply slightly, and we were ahead on the sales as well. And Bombay has sort of skewed the rest of India, because if you look at pan India total, we were behind Q4 2019 on sales, but MMR has gone ahead of Q4 2019 in sales when Q1 2021 opened up. That is January, February, March was better than October, November, December of 2019. 2020 se to hum achhe hi the, because that's 13,000 units. I'm saying even we were better than Q4 2019. So MMR did exceptionally well. But even if you take the other cities, and Pritam, answering your question, was it just the stamp duty? Yes, stamp duty did have an impact. But if you look at the other cities also did fairly decently. Across India, if Q4 2019 we had sold 59,000 units, we were very close to that number. So yes, there was a benefit, but it wasn't that was the only reason for the sale, which actually gives us positivity that even after the second wave, unlikely that stamp duty is going to come down, that the market should roll once again. Next slide, please. Some anecdotes, what we are seeing, guys, we're seeing a lot of development and the buyer moving to the periphery of the city. If you look at it, this is what the supply we mapped up, and this is where the demand is. Bombay, 70% of it is moving really to the periphery of the city, because people are wanting bigger places, and they're saying is we don't mind moving a little bit away, because not every day we will go back to the office. Next slide. If you look at it, the way the sizing of the apartment, next slide, Britt, so one is periphery. Second is, look at it, how in Bombay, and this is not only Bombay, by the way, this is full India chart. You'll see Bombay, which we have extrapolated a little later. We were saying, make it smaller apartment. Look at it, how the demand has moved up. So from 1,000 square feet across India, we had come down to 960, and we were moving into that direction. Post-COVID, look at where we are, about 1,200 square feet, where the demand has started to move up. Next one. This is an important slide on the consolidation. So what we have done is we have mapped out the sale for the listed developers and leading unlisted developers who are on the screen. So both these sales we're saying is at the end of financial year 2017, it was 17%. And the rest of it was 83%. Look at it in 4 years, how the listed guys and leading unlisted guys have taken now 40%. And 60% is left with the balance. And we were extrapolating this with China. What happened in 2008 in China? Exactly the same. 7 years it took them, and they are at 75% now of leading unlisted and listed developers. We're at 40%. We are at sort of 5 years. I mean, if you were to look at the trajectory of China, in 7 years, they were able to get on to that. I mean, really post the COVID, we think is that this will very sharply increase. And the light pink, that 60% is there, that will start to shrink further, which is what we're seeing from the consumer as well. Consumer is happy to buy under construction from A or a B plus category developer. But from a C category developer, the consumer is saying, please complete it. I will buy from you, but I'll buy only ready to move in. Not wanting to buy under construction from a C grade. And when Shobhit is going to come up, he's going to talk about it, that for a C grade developer, it's very difficult to raise any private equity or debt from the banks even. So somewhere they're getting caught out, that even the customer is saying that I want RTMI, and the banks are saying we're not going to give in, and equity is not willing to do it, and NBFC is not today prevalent in that market. So that's where this consolidation is becoming very evident for the quality A and B. And certainly we think is that in the market, though it has shrunk, many of you have actually done better sales in March 2021 than March 2020, because disproportionately you have taken share of from the unorganized sector. Next slide, please. Just very quickly, guys, I remember 2011, 2012, 2013, NCR used to be 50% of India's real estate. Today MMR and Pune is 46% of Indian real estate. This somebody from CREDAI had also asked us that what is the share that comes out from Maharashtra? I mean, we have 46% of the Indian real estate currently, which at one stage used to be 50% with NCR. And if you look at NCR, they've gone to 11% at the end of first quarter 2021. Next slide. I think this is another important slide, and this is where we're putting our reputation out. We're saying is that the market has been coming down from 2014, and we feel is that the current bottom got touched last year. We're saying from here onwards, it is a positive growth story. And we have projected 3 years, 21, 22, 23, 23 better than 22, 22 better than 21. And we're saying is that you're going to start to see the growth right till 2023, although 23 is still not going to be the peak of 2014. Obviously, we could not extrapolate it beyond 23 because it does require a lot of economic modeling. But 23 is the new peak from our perspective, yet lower than 2014. But I do want to put an asterisk and say, guys, this is only going to be for the leading unlisted and listed developers, that what trajectory that you're going to see. So in our opinion, the worst is done now. What you're going to continue to see from here onwards for good quality developers will be very good times. Next one. Just a few, I think 15 key takeaways for those who are planning their new buildings, guys. Please have half a bedroom extra instead of 2, 2.5, instead of 3, 3.5. One of the leading developers in Bombay created a Zoom room, and it was about 40 square feet Zoom room. That product was an outstanding sellout in Bombay, and the reason for that is that the Zoom room was actually fully fitted as a Zoom room. And it wasn't the working parent who looked at that as an office. It was the mother who looked at it for the kids' schooling. And that's where it became a big hit, that Zoom room, 40 square feet, fully fitted out. And the mother said this is exactly what I want for my kids' schooling, because they're just not being able to really have a more organized environment in the current dwelling. So something like that, if you think of a half a bedroom, we have a lot of people who have elderly parents at home. They need a night nurse to stay, or they have infants. They need some domestic help to stay. So half a bedroom more. Plotted development is selling out like crazy. I mean, we've seen that in Bangalore, Chennai, Hyderabad. It's just amazing. Guys are saying is that I don't want my destiny to be linked with my neighbor's destiny. If the neighbor gets COVID, then the full floor gets sealed. I want to have a plot. Alibag is on fire. Clearly with Mukesh Bhai, I've been discussing this for a long time, that this is where you're going to see a lot of the rich and famous Lonavala, Pavna, Khandala, Alibag. And this is not only Bombay, this is across India we're seeing. Townships is on the rise where people are wanting to live, work, play within that. Huge amount of demand in luxury. I mean, I did not see that kind of sales in the last 25 years. What I saw in the last financial year on the luxury for sales. And, when I'm saying luxury, this is 25 crores to 50 crore, that bracket, the amount of sales that was done. And, again, no rocket science. The rich became richer in this market. Stock markets have done exceptionally well. And, they were sitting at home and the wealth only got created more and more. And they're the ones who are moving out. Largely South Bombay guys, older buildings. In their building, there was no infrastructure. They used to go to CCI, Wellington Club, Breach Candy. Clubs got shut. As a result of which their, kids are now saying is we want to move to a better quality building because this will keep on happening. And we want to move into a building which has the infrastructure in the building. And let's move out of this old building where they're largely staying in a joint family. Next one. Huge amount of demand on ready units. Affordable, again, no rocket science, 40 to 80 lakhs. Clearly an end user driven demand. 0.9 is an interesting one where we've seen over the last 5 years, the salaries have gone up, say by 10-12%. Home prices have remained the same. As a result of it, the propensity of the homeowner to buy the house has improved. So the cost multiple of home ownership has gone down. A lot of millennials, and this is where Rahul will also, touch upon. They are the ones who are buying it. I am just amazed. I mean, we sell about 18,000 apartments a year. I was asking our guys that who is this buyer? And they're saying, Anuj, these are like late 20s till mid 30s. I said, they used to always lease. And, you would ever have an argument with them. They'll say, oh, 2%, rent. Why would I ever buy? Their parents, their sort of spouses, girlfriend, boyfriend, whoever it is, they are saying is, no, guys. This is now you have to buy that roti, kapda or makan, that makan that we had forgotten. Suddenly for the millennial, it is coming into picture. Next one. We think 2021 sale launches will be better than 2020. Construction activity has slowed down. In the subsequent slide, you'll see the comparison between the construction activity on the first wave versus second wave. We think that the prices will remain range bound, but on a positive trajectory. And we'll show you what Bombay has done in prices. Contrary to the thought that the prices were really going to drop, you will see in the subsequent slides what on an average RTMI under construction the prices have done. Low interest rate regime will continue, and large organized developers will dominate. Next one. So just on Bombay, this is specific 5 or 6 slides on Bombay compared to what India is. Next one. So this is, again, Pritam, what you had asked us, that where was it in terms of the registrations and the stamp duty cut. So this is government data that we have brought it out. So Q4 2020, there was 36,800 odd crores of revenue that was made on the collection of the stamp duty. 1,201 registrations were done. But what we have done is we've taken out the second sale out of this. So you are seeing the data which is more relevant to you, that this is primary. So we've stripped all the secondary transactions because that doesn't really it doesn't benefit us. Look at what happened when the stamp duty came down, and it continued in Q1 2021. Obviously, April, May is not the right representation. I think it's still 27th of May that we have the data. And if you were to look at the pre-COVID level, look at the monies that were being collected by the registration department in comparison to Q4 and Q1. Now, we don't know, it could have been that sales were done in the pre-COVID level, they had not registered it, and hence they were registering. Whatever the reason is, government made a lot of money. during this period of time. This is their data, which is showing is that how the collections had really gone up during this time, when it was 2% and when it was 3%. Next one. This is on how the market, both on the supply and demand, is really looking like. So if you were to look at 2019 versus 2020, and then we have projected a growth in 2021 over 2020. So clearly 21 looking better than 2020. A lot of people are asking us that, why do you say that? And we're saying is that we're getting a lot of this positivity still from the home buyer because of what you have seen in the earlier slides from a security point of view. Again, in Bombay, Pune, Bangalore, we saw many of the building societies differentiated between the tenant versus the homeowner. Tenant had a lot of stricter rules. They could not bring in their parents, families, friends, mates, whilst the apartment owner, there were a lot more relaxed rule in the same society. And that's where many of the tenanted guys have said is, we want to go out and we want to buy and not remain on lease. Next one. This is just on the contribution for supply and absorption. This is the sales. If you were to look at it, the highest selling has really been the peripheral central suburbs. This is beyond Thane, which has been doing very well. Navi Mumbai, Thane, a lot of the volumes that are coming up, a lot of sales that is happening is really to that direction. And again, it doesn't surprise us. This is what we are saying is that the full India is moving towards the periphery. And this is a reflection of the numbers that have got sold. Next one. This is where the share of 80 lakhs and above, if you were to look at it, the less than 40 lakhs, which is largely the Kalyan, Dombivli, that has really shrunk, and 40 to 80 lakhs has improved, which is amazing that in the COVID period, less than 40 lakhs has gone down compared to pre-COVID, whilst the 40 to 80 lakhs has improved, and the 80 lakhs to 1.5 crores has certainly improved hugely. So people are wanting to move to a better quality upgrade, and we'll see in the next slide as well.
Anuj, this is a very critical slide because like you said, the rich have become richer and the poor are slightly worse off. So
yes, exactly.
That's not seeing that kind of traction. So it's very important for affordable housing developers here.
Absolutely, a very good point. Yeah. Next one. This is just the unit sizes for MMR. So on an average, it was going down to 510 Q3 2019, gone up slightly to 580, largely because of online schooling and work from home. This is on an average. Next slide. This is an interesting slide. Is look at it. When we were putting this together for NCR, it had a lot of investor speculators. In MMR, it's only 10%. 90% is end user. But what is important is for Bombay, this is a very MMR. It's a very unique right-hand side. What you're seeing, this we're not seeing in any other city like this. Upgrade is 65% of your new home buying. Only the first-time home buyer is 35%. In all the other cities, it's completely the other way. There is the first-time home buyer who's coming in. And hence the messaging, what you're giving out is on this upgrade, because upgrade is 65%. 2/3 of the homes that were sold was of people who already had a house and were wanting to upgrade themselves. Only 1/3 of them were new that came into the market. Next one. So this is a preferred demand. Clearly, RTMI, which is ready to move in, is the most in demand, followed by possession within less than 2 years. Possession post 2 years, the demand drops quite a bit. So ready to move in or less than 2 years to completion is where larger demand stays. Next one. This is just how we put it up on the cancellations, what we had seen in the market. The first phase, which was April to August 2020, cancellation was 20%. The cancellation then came down September to March 2022 to 13%. So there was an immediate knee-jerk reaction when the lockdowns happened, and a lot of cancellation, which then subsequently went down. And Pritam, this is the slide that we are saying is that this is quite unique into MMR, where we've seen price escalation that we have put it up. You know, contrary to what media says is that the prices had to come down. Actually, it never came down. So there was a reduction that happened, and then it started to pick up. And then it was bound to have a reduction because, you know, cancellation had started. So we saw that under construction a reduction that people did just to lure the buyer. Once the buyers came in, the price rise started. In RTMI, the price rise was 10 to 15%. Very high. And, you know, this we saw with Vicky, with Rahejas, with Sandeep Runwal, with Lodhas, with India Bulls, all these projects which were all ready to move in on the luxury side. We saw a huge amount of price rise that have happened during this COVID time. And I think this is amongst the last slides before I pass it on to Rahul. 70% salary and 30% business guys who are there. And, you know, I'll just take sort of 5 seconds on this. We're finding this across India again. Salary has disproportionately gone up. And in salary, it is government employees. Their salaries haven't got cut. Pharmaceutical, IT guys. What we have seen, the guy who's disappeared is the small, medium enterprise guy. That guy has disappeared from the home buying market. It is either salaried guys or it is the super rich guys who are really buying. Next one. This is the decline, the construction activity. First phase that we saw 75% decline. There was almost quite a standstill that had happened. Second wave, the construction activity is still going much better. So 50% decline in the construction activity. Next one. Rahul. Next one, Bridge.
Thank you, Anuj. While we talked about how the overall millennials participating higher in residential and how the overall preference is happening when it comes to typology price point, I just compiled around 4-5 slides in terms of how the overall media habits have changed of customers influencing the overall space on media. What we are seeing on the screen is the entire eruption, what we have seen on the internet users, a huge transition of internet users. And secondly, the smartphone users. We are spending 3.5-4 hours on mobile phone daily. And thanks to all the data which we have got from telecom industry, that has given a large boost on spending larger amount of time on smartphones. Next slide, please. Google, which is the big daddy when it comes to the overall search of any of the content, whether it is searching for movies, real estate, anything. What we have seen is a new daddy is now emerging into the search block. Next slide. And they are YouTubes of the world, Amazon of the world, Insta, Facebook. These are the new platforms wherein people are now spending organic time on searching any of the content. Next slide. There is a strategic behavioral change which had happened, and this is purely from our typical habits. If you're spending time around 3 to 4 odd hours, you can imagine our habits on fingers in terms of how much of typing is being happening. What we are seeing in the last 15 months or so, the habits of typing is now changing to talking. So people are talking more in terms of giving commands to get any of the information. Similarly, the behavior is now reducing from reading and increasing towards watching. Now, this watching is largely for video content, pictures, and any of the viral videos which is coming across. And both of the formats, the traction is largely towards regional languages which is coming across. Next slide. This is one big shift what we are seeing. Purely what is the power of voice which is going to see in the near future. We have seen 10,000 plus odd gadgets are now compatible with voice format, whether it is empowered by Google Assist or Alexa, Series of the world, etc. And this is across all our lifestyle, whether it is the car, home automation, television, mobile phone, so on and so forth. So we are all surrounded now with the voice format. And we have seen, if you look at point 2 and 3, that's where the large growth has taken place as a preferred choice when it comes to voice search is concerned. Next slide. I'm going to take some time on this slide because this is a crucial slide. how the customers are now looking at media consumption. We have seen a huge transition has happened during pandemic towards digital. And if I were to bifurcate that into OTT platforms, OTT are typically over-the-top platforms such as Netflix of the world, Disney Hotstar, Prime, and so many, Wood, Z5, so on and so forth. We have seen larger content is now available. It's almost like a next television, what we are seeing. 49% growth we have seen. Digital has grown now to 23%, where people are spending more time on that. Newspaper, which is the best bet of any of the brands is concerned, has seen a sharp dip. Similarly, we have seen a large drop when it comes to outdoor as an industry. Surprisingly, and naturally, what you're seeing is that because of work from home and larger lockdowns, people are not traveling much. Hence, it has impacted the radio industry as well, and we have seen a 54% drop on that. Next slide. From all this, if we were to summarize 3-4 pointers, which you need to be watch out for, because people are spending larger amount of time on digital and especially on mobile, 90% of the people are consuming information on mobile, and hence, instead of having a standard website, it is going to be the M sites which are going to be the preferred ones. We have seen digital is largely used for lead generation. I'm talking about specifically on the real estate front. Lead generation, now there is an emerging format of artificial intelligence. How does it work? Is we all are sitting on large databases. What typically happens is that whenever we generate any lead, we nurture that, and large number of leads goes back to the dustbin. And these are the bins wherein we action it or don't action it. What artificial intelligence does, it goes back to that bin, looks at the algorithms and everything, and brings back some of the leads which still has the juice and propensity to have any business generation. Combining this is a new wave when we are looking at digital to be looked at. Yes, with the weakness of media shifting towards from offline to online, there will be pressure towards marketers that how we can look at 100% digital only activations. And lastly, because we have a huge channel partner base, we have seen channel partners largely look at an offline model, wherein looking at one-on-one connects, databases activation, etc. We will see large transition of these channel partners moving onto the digital platform. Whether it is the education awareness, and this platform will become the most promising method wherein channel partners needs to interact and engage with those customers. That's it from my side on the customers and digital trend. Over to you, Shobhit.
Thank you, Rahul. Guys, I'm going to talk about capital flows. You heard Anuj on what's happening on the physical market, how the buyer behavior is changing. We heard Rahul speaking about how digital consumption is changing habits and how selling is going to change. But all this does also have to sort of juxtapose with how capital is going to flow and what the capital providers are thinking. I think we had a similar call last year after the first lockdown, or in the first lockdown. We were a little bit blindsided. When we spoke last year at the same time, roughly the same time, our stock markets were down to zero. I mean, they were falling like no one's business, right? And we didn't know where it is headed. And we were completely sitting at home. All of us were sitting at home. We didn't know what was happening. Look at it this time, governments and states have announced lockdown, but it's a little bit partial only, right? So businesses continued to work while the health crisis blew up. So we were fighting the health, but not thinking about business, yet the businesses were open. And by the way, our stock market continued to go up and up and up. So obviously it is reading something that we weren't sure of, which it believes, in my view, is an endorsement that somehow we will get over the second wave, right? And we'll come out better, more profitable, hopefully at the end. I know it's at the cost of lives, but it is going to come out. So in that sense, our stock market is really outperforming. And, to an extent, some people think that it's not in tune with the earnings, but it does look into future a little bit. And lastly, if you look at what Anuj spoke about, and also Rahul, we are not out of the world, right? So US to Australia, they've had the highest sale of residential in 14 years, including China. And we saw Anu spoke about cricket match 50 plus 50 overs. In 50 overs, we actually scored more than what we did in the previous 12 months. So 6 months was greater than 12 months. So obviously, it means that the demand is intact and the entire world is sort of going through the same experience. And what all the developers such as you on the call are doing is building more beds and more sheds. I'll talk about it when we talk about capital. So let's first focus on resi, and then I'll talk about what's happening on alternatives as well. Guys, next please. At the end of, or at the beginning of last year, when the first wave hit, we could have never imagined that we'll finish the financial year with over $7 billion of total investment. We thought it'll be a complete wipeout. Residential had come to a standstill. People were talking about work from home. Some leading IT companies had said they'll reduce their workforce to less than 50%. Nobody knew where this is headed, and see what really ended up happening is a massive consolidation on the office side, led by office, of course. And we breached the previous high of $5 billion. So 20% rise in the total inflow of capital last year. Next, Bridge. This is an interesting slide. I will start from where Anuj showed that how consolidation has happened, and I'm not surprised. If you look at this slide and you look at financial year 15, of the total money that came in, 73% went into residential, and only 25 went into office. If you look at FY20 and then FY21, residential was reduced to 4%, and this last year it was 11%. And largely the big red that is sitting is a new asset class, or not really a new asset class, but a new type of transaction, which is portfolio level deals. So we saw Brookfield buying RMZ, we saw Blackstone buying Prestige, and so on and so forth. So it really said, forget about asset by asset by asset. We can write out the big check and will you sell your portfolio? What it did was it changed two things. Our average deal size went from 35 million. Sorry, there was some background noise. So it went from
put your mic on. Thanks.
Yeah, it went from USD 31 billion to nearly $180 million in last year. And even more interesting than that is, of the $7 billion that, or $6.2 billion that got invested, it's a 80-20 rule. 20% of the deal were equal to 80% of the value. And the rest of the deals, which was literally tiny deals that happened, that took up the balance 20%. Next, please. This is how the money was spread by geography. So obviously MMR got a lion's share, followed by Hyderabad, followed by Bangalore, and then Chennai was the lowest, largely because of two things. One, the office portfolio that got sold and even retail were all mostly South India. So obviously the money was between Bangalore and Hyderabad. What happened in Mumbai was quite different. We didn't end up selling big buildings, but we ended up selling portfolios of loans, right? So can you just go to the next, please? So Bombay ended up receiving money, but perhaps not the developers, but their lenders. So Piramal, Indiabulls, Edelweiss ended up receiving large part of this money, where they were bundling up your loans and creating liquidity for either themselves and partially for you guys, right? So these are the top 10 deals. And from our old times, I remember, when we were doing global reviews, we would hardly ever have $100 million deal. This year, in the top 10 deals, the lowest deal also reaches $100 million, which basically means that people have the ability to write the check. The larger, the better. They don't want to deal with the people in the pink, which is the 60% of sales. So that completely takes out resi. And therefore, they are just focused on doing big, clean, mega deals where they can do some meaningful investment. They're not interested in writing out $20 million checks. Next, please. I will summarize this very briefly in saying 8 trends in private equity. One, I already spoke that the size is getting bigger. Second, rental portfolio still continues to be the most attractive form, whether it is data center, industrial, logistics, and office, of course, including retail. So people just don't appreciate the construction risk. And if you want to price the construction risk, the cost really goes up. So all these yields that are being bought are around 8%, 8 to 8.5%. Moment I go and talk about resi equity, it simply moves to 18, 19, 20% equity yield. Now they're saying, by the way, I can buy debt at the same price. Why should I invest in equity? So resi is really starved for equity. There is literally no equity left for residential at the moment. But going forward, we think it will come back as consolidation continues. Industrial logistics is very interesting. People in this space are struggling with Mumbai. It has received the least amount of money because Bhiwandi is really tough to crack. But Bhiwandi is 35% of all industrial and warehousing requirements. So guys, if you can do something in industrial logistics, I think there is a pool of capital that is waiting for you guys to do something. Data center is the new sort of boy or toy in town. I think Rahul spoke about Google. There is a data localization policy that kicked in during the lockdown. Google alone requires 400 megawatts of data center in India. India's total capacity of data center today is sitting at 600 megawatts, right? So we are moving from all India size of 600 megawatt to just one company taking up 400. And then all the other names that he said took Amazon, Facebook, and all other OTT platforms, guys, they have to localize data. They have to store the South Indian movies in South India. They can't do it elsewhere. You know, this is a big place. And again, Mumbai, especially Navi Mumbai, is extremely well poised. I think all IT will stop and everything will get replaced by data center. By the way, they have higher ability to pay for land. They have Bombay has the best cable connection. We have surplus data. We have green energy. So I think it really is going to go and take a big space in Maharashtra. Next, please. REITs, despite all the challenges, enjoyed a great market acceptance. 2 REITs got launched. And what was very interesting is our HNI category in both these REITs, more in Mindspace, less in Brookfield, got oversubscribed by 13, 14 times, which means that people do believe that rents will continue, collections will continue, despite all this talk about work from home. I believe if India has to grow at 6-7% and we have to accommodate work from home, we will still double our space in office. Not in near term, but in the long term, I think it's a big play for people. And I think we are doing very little of that in Bombay. I think offices have just come to a standstill on a lease basis. I think we are moving towards strata sale. Last mile financing, of course, Swami has taken the lead. It's paved the way. I think over 100 projects now they have underwritten. The first project was underwritten in Mumbai, which was the Cable Corporation project. Glad to announce that it's finished, handed over to the customer about 10 days ago. It was in the press. So really successful. I think the only difference is there are many other Swami funds on the border line. They want to invest to help stuck projects, to help other projects. The problem is that Swami is the only one that has protection from Government of India under the NCLT rule that they still get priority. If we can change that, the cost of last mile financing will drastically come down. Today, obviously, it's like a bitter pill, very expensive, 18 to 20%. But if any of you are listening with the government, I think this can be a big ask to say, look, guys, please look at this cost. If Swami can afford 11, 12, why are we giving it to last mile funding at 18, 20%? Stressed asset resolution, I think this is a great one. I think in Pune, there are bids opening for one of the big players. But, you know, I genuinely believe that NCLT will start to play a big role. 2-3 cases have happened. Prestige, Godsons, Kotak. Prestige was in fact in Bombay. It got resolved. So there are resolutions that are possible under NCLT. Once you come out, it's like a laundry. You're absolutely clean. The buyer is protected from everywhere. And I think that's the way stressed assets will find resolution, and home buyers will find a new developer. And guys, finally, I mean, whatever we say, foreign private equity players have a mega share in that $6 billion or $7 billion. So Indian private equity hardly contributes anything. Yes, there are people like Motilal Oswal, ASK, SDFC, and so on and so forth, but their contribution to the real estate side is very minuscule. We can all go back and sort of stress on ICICIs and SDs of the world to raise more domestic money. I can actually go on talking about it, but I want to pause here and perhaps open this for question and answer. We have very senior developers on the call, so I'm going to just stop and pass it back to Pritam.
Bridge, can you stop sharing the presentation?
Thank you so much, Anuj and Shobhit, and as well as Rahul. I think it's a very, very, very comprehensive presentation with which is led by data, which is not the most what do you call? It's not the forte of developers to take any decision based on data in the past. So I think as times are going to get tougher and volatile, I think data-led discussions and decisions are going to be very important. Because capital is not going to chase people who are, just going to go without any, with a gut feel. Gut feel is important from a developer's perspective, but so much has changed. Marketing has changed, markets have changed, consumer behavior is changing. That data-led decisions are going to be more important. Thank you so much, ANAROCK Research, for that detailed data. We'll circulate that among the larger group.
If I have your permission, I do want to sort of ask a couple of questions before you get into the questions to Ranjit Bhai and Deepak Bhai, if I have your permission.
Sure, of course.
Yeah. So Deepak Bhai and Ranjit Bhai, one question that we are sort of grappling to understand is that your cost of construction definitely has gone up. Whether it's steel, cement, labor, etc., whatever, it has gone up. Our thought is, say, 50-60% of your existing inventory, which is under construction, was sold at a discounted price because subsequently the cost has gone up. Now the balance, say 30% that is left, has to be sold at a significantly higher value to be able to, get in the margins or come out neutral out of that project. Because 60-70% was sold at the previous prices. Subsequently, today, the price of construction has gone up and you can't pass it to the customer under RERA. Now the balance inventory is small inventory left, which has to bear every additional cost to be able to compensate the developer to come out either neutral or slightly positive. The question is that, is the buyer going to be that elastic to be able to absorb the price? Our thought is it's about 15-17% that the price escalation will need to happen. Over the next 6, 9, 12 months, whatever it is. So my question is that which we are grappling, is the buyer going to be willing to come out and pay that additional money for the inventory?
To answer your question, we also have the same question with us. We are also struggling to find the right answer for the same. Construction cost has definitely gone high by 15% minimum.
Yes.
Location to location, the construction of maybe 30-story tower to 50-story tower in the city with a high amenity and a high value. Naturally, the cost is around 3,000 to 4,000 in suburbs to around 5,000 to 6,000 on the city, and the cost has gone up by 15%. As you said that in this pandemic, people started buying houses, and everybody found it last 6 months very interesting. This last two quarters, we had a great run. But the thing is, developer to developer, there was some price correction in the beginning. You also mentioned the same thing. There was a correction. Ready to move in, few developers could able to get the little better price even in pandemic by third quarter or fourth quarter, they could able to even increase the price because of scarcity and short of supply and select inventory. They could able to create little better pricing. The challenge still remains for everyone. Under construction, we have sold. Under construction, we have sold, and the prices of construction costs has gone high. Ready possession, we have already spent on construction, so there is nothing to worry. But under construction, your question point of view, that is a really area where we are also concerned, we are also worrying. The thing is, land point of view and certain benefits is average. If we look at it, that there is some improvement in FSI in the city and suburb and unified DCPR and other things. And some sort of a land buying point of view, we are able to get cost neutral. If we say we may not be able to make the money what we want, of course our prices have gone, means margins have gone very fucking. It's like FMCG type margins we have been operating when we are selling under construction. Under construction, we are not able to generate that great value, but still to meet the cash flow, we are able to sell under construction. Margins are low. We have to survive with the margin. Definitely, we would be wanting to have some selling price to improve to recover the construction cost. But to increase by 10% also is a challenge in today's time. We do expect maybe third or fourth quarter, there should be some sort of acceptance in the market that without reduction in velocity, the revised increase in price should be accepted by the customers. We will be working on it. We will be taking even your support also. Finally, you are also one of the major support for us to sell the properties. So while announcing any new launch or even doing the existing sale, we will definitely wish that you could also able to create sort of a feel that cost has gone up, everything has gone up. We have to sell at the little higher price. At least we expect by next March, the price should be high by at least 10% to recover the whatever the construction cost is there. So that is the thing. I think Radhibhai would be able to add further.
Ranjay, you are on mute.
Yeah. Hi everybody. You know, I think this is what you rightly says. The price are going to be increased because steels and cements and all other raw material price has gone exceptionally high. So we have to balance between our margin and the cost, rising the cost. See, at present, what happened indirectly, the cost has already been, price has already been earlier, whatever the negotiation margin. Earlier, say we were negotiating to the customer, say 10%. So we had already indirectly, we had our level of negotiations, we had decreased. You know, we may going up to 10%. So now we may be going up to 5%. Just I'm giving you an example. So naturally, see, at the most, we cannot do no businessman can do any business in loss. So they have to recover their cost. And this is the price is not as the marginal increase, it has gone more than 15 to 20%. So there is no option to recover from we have to take some hit from our margin and we have to recover from the customers and we have to balance between our margin and the price rise. So ultimately the price is going to be right.
Anuj, I tend to agree.
I want to add here, Anuj.
Sorry, who's that? Yeah.
Hi, Mayur.
Yeah, Mayur.
Yeah. See, the 3 points which I have noted is that, see, one thing is that pre-COVID mortgage rate was hovering around 9 to 9.5%, which has come down to around 6.5 to 7.
Good point.
So, the purchasing power point of view, as you pointed to whether buyer can afford, I think there is a 5 to 7% affordability has already come by way of loan, particularly in the range of 40 lakh to 1 crore kind of a home. Number two, the SDR and GST definitely will chip in. I think there is something which is definitely going to come, which will really chip in another 3 to 4% in the buyer's cost, which actually is affecting directly it's not directly to the developer. And thirdly, we will see that now the sellers, as you rightly pointed out, 40% are strong developer who are really can kind of control and can add increase 3 to 5% of the sale price, because it's not now distressed sale anymore when you come to the next phase. So in my opinion, like what happened in the vaccine, when it was free, nobody is wanting to buy. And today, at 1,000 even I want to buy. Right? So that same thing you will see in the real estate housing, where when everybody comes out and buy, I don't think in last couple of years there's not enough been built, and definitely we'll see 10 to 15% increase in next 1 year.
So, Anuj, I completely agree with what Mayur Bhai is saying, because what two things are happening, that the stronger are getting stronger. So your slide showed that it's going towards branded developers. When it's going towards branded developers, their balance sheet strength is going to be better. Thereby, they are going to lead the price increase bandwagon, because they are feeling the cost increase also. So they're very conscious of that, and if they are getting good demand because of the polarization of demand, they are going to be able to take the price up a little bit and a little bit. As soon as they do that, the next level will be able to also slowly benchmark their prices to their
Got
level.
it.
And that's because of markets being weak, Anuj, a lot of developments are not going to see the light of the day. So eventually in the next 1 year, your supply is going to be so minuscule or constrained that when demand rises, whenever called V-shaped or whatever shape, you're going to see a lot of that going towards under construction, where there is not enough supply from good developers, and there's going to be a price push then also. So I think in the medium term, I am very bullish.
I think Naveen probably wants to contribute on this. I just, Naveen, before you do that, I have a very quick thing as a follow-up to Mayur Bhai. Boman, to you. Mayur Bhai's second point, which he has said, is the SDR GST. I mean, you're sort of very aggressively coordinating with the government, both at the central and the state level. What's CREDAI's thought, whether we are going to see another SDR, cut coming in at the central level? Do you think, are there going to be anything that is going to be given by the central government this time, including, like Mayur Bhai said, GST?
So, Anuj, we've been pushing for it, you're aware. We've made dozens of representations. We've spoken to the various FMs at various state levels also. It's a combined effort. At some point, I think the government will see the anomaly that they're creating in only the construction industry or real estate industry, and creating actually a negative sentiment for themselves as well. So we're hopeful, but I have no answer for you today.
I have a question. I have also got a question for you, Boman. Boman, tell me something. I mean, I think most of the developers on this call are largely residential, predominantly residential. There are only 3 private equity deals that happened on Resi. One was in Chennai, one is in Bangalore, and one you did in Bombay. So tell me, what was the trick and what's the mantra? What has been the experience? How do you attract such a blue-blooded investor into a project in Thane? It's not easy, of course. And you've now spent almost a year. So how's that experience been? What's the mantra for some of the other ones?
Boman has Benita.
So Benita, you have a lot of burden on your shoulder then.
No, I don't have any burden. I have a fabulous mentor and a fabulous person leading us from the front. So I don't think I need anything else.
But generally, Boman, I mean, it's a one-off. I mean, they were, like I said, there were only 20 deals that got done. 3 were in Resi, and you were one of the recipients. What was the mantra?
So, Shobhit, thanks for asking the question. And they truly are a blue-blooded investor, and we have started off a relationship. I plan to keep it. At various occasions, I've told you, Anuj, both of y'all, that I plan to keep this relationship intact. As a matter of fact, I plan to keep this relationship growing. I think what most of you don't know is that this almost fell off at one point of time. It was Friday the 13th, September 2019. This just fell off. It did not happen. But I think it was persistence. It was belief. It was the fact that we knew there was value on the table and we were ready to show it one more time to them with a great amount of patience is what got the deal done. And you're right, it was a overall team effort. I think they took a couple of calls themselves. I think it was the relationship that we had built. Finally, it's people talking to people. And if people are comfortable with people and they believe what you show them, and they believe they can add value to you, that's when relationships really happen, Shobhit. And you played, you know the role you played. So hello.
And what's been the experience, Boman? I mean, that's what have you learned? What are the few things you would have changed? You wouldn't have changed if you hadn't done a deal with Capel, right? You're still a very successful developer. What have you learned from Capel's deal and how they operate?
We still have some learning to go. But the first thing is you lose that gut feel, decision making that you were so good at doing, right? You need to be structured. You need to be putting everything up as a proposal, and it needs to take its own time to go through. So you lose some amount of flexibility. I'm hoping that changes when the pandemic reduces its grip on our country, and they feel it's safe enough to have their people out here. So a more live decision making will take place. But till then, it's a lot more structured. Everything is about any changes need to be reviewed, need to be accepted, and need to be arrived at in joint discussion. Having said that, they're also learning, I must tell you that. And just as of yesterday, we had a fantastic call where, they said, we keep talking only about business. Let's just talk about other things as well. Let's get that comfort in amongst our people, our teams together, so that they feel as one. Because, even today, the Indian psyche tells you that I'm talking of 4 levels down. The Indian psyche still thinks of them as an outsider, and we are working greatly internally to kind of change that. And towards that, we're going to start something called a simple coffee over online coffee, which is going to be half an hour, well thought through section where we're going to get integration done amongst the people. And this is going to be extremely critical, Shobhit. At the end of it, I might have a lesson or two that I can share with all my fellow developers out here. But one thing is certain, if we need to grow, we need to think of the power of partnerships. I've always mentioned this, Pritam, in a lot of our talks, we've been discussing how it is that more than one developer or one strength or one strain of power come together to build a possibly greater, future. And we're seeing that already happening, being led by some very good developers and some financial institutions. We're seeing that happening with, even tie-ups where you guys step in with fellow developers and bring in the financial muscle. We are all going to learn. These are going to be phenomenally exciting times, Shobhit. And let us all hope that we grow together.
No, good experiences will make more private equity come in.
I'll just add to that.
I hope you are successful going forward as well, because success creates success. So I'm very happy.
I have said this on a couple of occasions to whoever I have met. I have said that the one thing that we will do is we will bend over, in all ways that we feel are necessary. Of course, I'm not saying we'll bend over backwards, but the point is we will do what is right. We will continue to kind of be transparent. We will continue to kind of share. And it's not a given that there's going to be money to be made on both the sides all the time. But if there are dips, I will be happy to take that dip also. And if it's because on my account, I will happily take that dip with a smile on my face. Not a problem.
I'll just add to that. I think what we're going to definitely learn is to speak Mandarin at the end of this entire relationship. But that apart, I think it's brilliant to kind of go through an entire transition where you learn to think more clearly and in a structured way, so that you have an ability to predict. Like, while R&D is something that is becoming a buzzword and people are focusing on terms of predictability in a business, to see someone internationally do it across the country for so many years and bring that here and help your team to adapt to that kind of a thing is one of a very it's actually brilliant to see that. And I think that's something that we should really all of us take up from it, because their reliance on data and predictions and how data can be crystallized to a last extent is something that we're really learning well.
Pritam, Naveen wanted to say something. Sorry, I cut him out at that stage. Naveen?
Yep. So, hi Anuj, hi everyone. Everybody said that prices will go up, and that's because, cost of construction has gone up. But it kind of defeats your boxing match thing, as you said, that if you increase your prices, you will face some resistance and you will end up having the third wave coming back quickly. So personally, I feel, increasing prices I mean, that statement not be true for across all projects, but I think over an overall thing, I think we have got a premium reduction. I think we should sell because increasing prices by 5-7% would make people any which ways they are going to pay, instead of 3%, they're going to pay 5% stamp duty. I feel we should continue and focus on sale, even if we don't increase prices, and in fact be in the boxing match once things are kind of better, sell before the third wave comes. So I feel personally increasing prices may not be the best decision, though you need it, you love it, your business needs it, but getting the volume and getting the customer inside, getting him to pay the stamp duty and having the volume is far better position than missing out and then coming up with 1,000 schemes to lure the customer. So I feel a little different on increasing prices going forward, at least till March 2022, if not longer.
Well said. I think.
Shobhit, you're on mute.
I'm saying, Naveen, you're only saying conserve some energy and don't start playing very hard in the first round itself. There are many rounds to go, right?
Yeah.
So price rise may not be the first round thingy, right?
Absolutely. Absolutely.
I think what Rajni
Good
said
point.
is important, that we have to balance the cost and the volume, because eventually if you have debt on your projects, interest cost is anyways building up. So whether you increase the price or you sell more, somewhere or the other you need to. Ramin is basically saying don't keep the debt, quickly move it out by selling it to a customer. So I think that's a valid point, and
Absolutely.
that makes this kind of conversation makes all sides come up. I'll start with a generic question.
I think Nayan Bhai wants to say something. Yeah, sorry.
This is a little complicated thing, whether to rise the price or not, because cost of selling has been going up in the last 1 to 2 years. The fees that you pay to the channel partners. And secondly is that, at the end of the day, you want to see how much, today all developers' goal is to sell, make their debt to very manageable levels. But then one has to also see that once you bring it down to that level, how much is left with you to really take new projects and grow. So I feel at some point of time, we will have to, increase the prices. This is what I feel. So this is a little complicated thing, but I feel at some point of time, we'll have to increase the prices. Maybe 3-4 months, we may still look to lock certain sales, but having locked certain sales, then maybe one can take, so it's going to be very situational specific kind of.
Yeah, agree, point taken. Mukesh Bhai, yeah.
I would like to strike a balance between what Naveenji said and Nayan Bhai said. We have to keep on selling. There is no doubt about that. We all know that price has to go up. So either we empower our buyer. I mean, we can't increase their salary or their income, but it's depend on economy. But can we think of for our next session that we give a boosters like reduction in stamp duty again, or reduction in GST, or reduction in the interest of the home loan? I think this is the issue we can't bury now. Probably after 1 month or so, with the help of Anujji, Shobhitji, we should come in case we are compelled to. Ideally, we'll play between what Naveenji and Nayan Bhai said. But if as an industry we come forward some solution, it may help us in a longer term. Right, that's it.
So, Anuj, you can see the kind of discussion and thought process that happens when you have price in the discussion in the developers.
And both are very solid arguments.
Yeah,
both are Naveen's argument and what Mayur Bhai said is both are very solid. I mean, you can't really identify. Maybe as Naveen rightly said is, it'll depend on project to project and Pritam developer to developer, given the financial status and the stage of the project.
What has happened is that the majority of the price increase and all of that has been built in. And now we think that we have to only kind of economize the price so that everyone can buy. We did what we were doing 16 and before that. After the GST and all of that, there's really been no price increase. So at least the inflation-related price increases should be built in. But obviously, unless we get used to get rid of all our stock and a lot of other issues, that's going to be a challenge. I have one question I want to start with you, Anuj. If you have my permission, I have a permission. you in your slides rightly said that there is polarization. And for the audience at large, please understand that basically what he's saying is that people with branded companies, Mahindra, Tata, the bigger names, balance sheets are getting more projects from landowners as well as from other developers. And in their own projects, which they already own, they're seeing better sales. When polarization is going to happen, you're saying that the customers are more comfortable buying under construction with them. Your advice is required in the first question is, we are all, the large majority of our member base is not the corporate developers. What are the best practices that we could take from them? Because we are what we are and we have to survive this pandemic, and we will always be in business for for a good time. But what are the learnings that you can tell us that they are doing that we can imbibe so that we can also sell to our local private market, local micro market?
So Pritam, they asked us the same question about you. What is it that Pritam and the team are doing so brilliantly that we're not able to do it? So I must apologize that I wasn't really referring to the corporate developers, because I think is in our boardrooms, and I sit on a couple of these boards, they struggle. They are enamored with the people who are on the screen. How are you guys being able to do and we're not being able to do? So I just want to make sure is that it wasn't Tata, Mahindra and Godrej that I was referring to. I was referring to listed, and many are listed in this, and leading unlisted. I never used corporate developers, because I know in their boardrooms they're discussing is that how are you guys doing so exceptionally well? I mean, some of their turnovers you will see is half, 1/4, 1/3 of many of the people who are on my iPad screen only. So it is that much that they have. So I don't think so they are the right example. Who is the right example is, several of the guys, I would take the names. So what are they doing well?
Yeah, what is your advice?
I think 4 things that they're doing well is one is Pritam, is the financial prudence. Second is focus on construction. Third is focus on the customer inquiries. Fourth is the governance within their entire system. These are the 4 things. And then as a developer, one thing is always there: fear versus greed. So it has to have a right balance between fear and greed. If greed overtakes fear, then you have a problem. And if, Pritam, again, you can become very fearful and not do anything at all, that's equally bad as well. So I think those are the 5 things: financial prudence, governance, customer focus, construction, and a right balance between fear versus greed.
So what basically Anuj is saying to the larger audience here, we don't have to be, and we don't have to have those big names. If we just do what he's saying, right, in the area that we have our projects, if we put all our monies and all our strength and focus to completing those projects, we'll get good sales. If we have transparent systems where our lenders, our investors, our HNI clients can see what is happening in the company, they'll have more confidence in coming and giving you more money and booking more flats. And if you treat the customer like you would normally would like to be treated yourself, even if you buy a watch, if you buy a pen, you buy a mobile phone, you like to be treated well when you go for a service. Normally, that's not been the attitude of our builders in the past, at least. If they come back for leakages, they come back for any issue in the flat, we generally leave them to the junior most person on the side to handle it, and then he gets frustrated and he writes. So if we do these things well, please be confident that our demand cannot be extinguished. In a restaurant, if you did not eat yesterday because of a lockdown, you cannot eat for yesterday. If you didn't fly a plane for yesterday, you cannot fly it today and tomorrow to make up for yesterday. We definitely can buy our house for tomorrow if we didn't buy it yesterday, but we have to sustain and build the project so that they can buy it. So our demand is only got postponed and not extinguished. So have the faith in the industry and keep at it, because every one of you who does a good job creates a good resonance for the industry. So like Boman has created a good resonance by doing a good deal with Keppel. It will send good waves to Singapore, and those investors will come, more of them will come here and try and find more Bomans in the market. But if all of you who's in Borivali, in Chembur, in Thane do good jobs, those markets will come and definitely buy from you. So that's first important thing I wanted to set and establish, that all is not over for we hear a lot of banter that this development is not going to, projects are not going to make money. Should we be in this business or not? We should be in this business because we have borne the brunt. We better get the butter at the end of the day. Boman, you wanted to say something?
Rajni bhai wants to say something. Go ahead, Boman.
Yeah. No, Pritam, you are telling first of all, you generally ourselves, we should not degrade ourselves.
Yeah.
Because all builder, whether I am listed, so I am talking whether listed, corporate, non-corporate, because first of all, by RERA coming, I know we are all, as per by RERA coming, we all committed to our date of possessions, we are date of our scheduled and everything. So these all builders, and you tell me, I am the witness of my 50 years of my profession. Tell me if any builder, suppose if I had booked if any of our fellow developer has booked the project, say X rate, and he has charged X plus at the giving time of the possession. I think there are more than 90% of the developers that have not charged a single penny. So I think we cannot, our builders are always the great. And I think any developer, whether it is a listed or corporate or non-listed, if they will they keep their commitment transparently, so 100% they are going to, material is going to be sold. So there is no difference according to me. Everybody is Tata and Birla our builder. So we should not, I am telling, we should not disgrade ourselves. So, we are giving in time and size. Whenever we are sometimes our fellow developer has become because of the victim. For example, somebody you just tell me, oh, Navy ka rules aa gaya, kya karega, what these things? If the national bird sanctuaries rule comes, what we can do? Funnel rules aaya tha. So sometimes we are the victims of circumstances. Otherwise, at large, developers are largely committed for their commitment.
Perfect. Very well said. Boman, you're saying something, or can I continue?
Yeah, I was just saying that, one of the things that we've all got to understand is real estate is a long-term business. We should not look at it only project by project wise in terms of profitability. We need to sustain sometimes, even if we take a hit, we need to just take that hit and move on. So as long as all of our developer fraternity have the financial, this discipline to be able to take a hit, or we have to create that financial discipline so we can take a hit maybe on 1 or 2 projects and still keep going on, and that will keep the long-term perspective in mind and move ahead. That's all. Guys, I'm having bad Wi-Fi, so I'm keeping my video off.
Cool. Thank you for that. Anuj, while I'm on you, I wanted to ask one question which came on our Q&A chat. Our audience wants you to just throw some more light on the future of office and retail sector. How will they perform in the medium term? Immediate term, so you already have shown your data.
So, Pritam, I sit on board of some of these very large listed office private equity guys. So the way that we are looking at this is that March 2022 will be a slow year. Had the second wave not come in, our thought was that by September onwards, we would have started to see people coming in. In one of the companies that I sit on the board, they have in their parks 220,000 people coming in every day in their IT parks. 220,000 before COVID. Today, they have 8,000 people coming in. 8,000. So, expansion will be a tough job to have it. I'm sure we can throw more light on some of these REITs where it was 98% at the start of the pre-COVID level. Today, they are at 85% occupancy. So from 98 to 85, there's a lot of vacancy that has got created. Our thought is that this will pick up from financial year 2023 onwards. So March 2023 will be a better year. March 2022, we do not expect to be any different than what we had seen March 2021. And we will be back onto the 40 million square feet, what we had seen in March 2019 by March 2025. So it would take us 5 or 6 years to get back to that level. There are just 2 other things that I would like to add on to this. One is, it is possible that the re-densification. What I mean by that is many American corporates who were squeezing, just like what we were doing with the residential, they were also squeezing to 80 square feet per person, 70 square feet per person. They're all moving to 125 to 150 square feet per person. So you could potentially have an advantage and upside coming in. Second is, we believe there will be more outsourcing that will happen from the US. And they would want to have more savings. And there is potentially a lot more clientele that can come from the US. I'll give one anecdote to the audience. Since 2005, every year, American companies have taken more space on lease in India than Indian companies. So for us, if the US economy is doing well, which it is doing very well currently, we get a huge amount of uptick. We get a huge amount of demand. Second comes the Indian corporates. First comes the American corporates for Indian real estate office developers. On the retail, Pritam, this will get very consolidated as a space. It will remain with a few handful guys. Shobhit and I believe the first REIT of retail will come this financial year, which will be really interesting. We believe one of the private equity guys will do its first REIT of about 20-25 malls. And that is where we think a lot of the single mall owners will get consolidated into that REIT, where they'll go in. I don't think this will be a play of single mall guys. It'll be just like in the US. I think as an economy, as a real estate sector only, we're moving from a situation to a lot more mature in every aspect of the game, which means is that the consolidation across this sector will continue to see. I have no problem with one mall owner as well, because he can put it in his mall into the REIT and have REIT units and benefit through that is. But definitely there is a lot of consolidation, and retail will see more pain than what we'll see in office. And the reason for that, I say, is that I don't know how the online behavior has changed.
Exactly, that's the point.
And I don't know, in the US, the talk is, Pritam, is, are the multiplexes going to continue? Or people are very comfortable having a popcorn and sit at home, watching it on the OTT platform, the movie. Maybe for the big blockbuster, they will still go. But for the regular movies, would they go? I see my parents in Delhi. They become very used to now online grocery. I don't think so they're ever going back into the kirana shop in the market, even after the pandemic gets over.
Very, very interesting. Shobhit, you want to say something?
Yeah, two things. One, just to continue Anuj's conversation, maybe the kirana shop will get online. So hopefully you don't need to walk to them. They will come to you, whether it's through WhatsApp or getting linked to one of these big baskets or some other chain like that. So they're still going to continue. Maybe habits will change. So that's a nice thing. Second, on the offices side, I just wanted to add that Anuj mentioned work near home, which basically resonates the global trend of decentralization. So we had these massive CBDs and we had massive residential colonies. I think the two are now getting merged, saying build offices near homes. Number one. Number two, please build it as you would have built it for corporate. So I think what we started doing is, when we want to sell for retail, we start to degrade the asset. Right, look at one BKC as an example. The front tower is fully leased, the back tower is for sale, but you cannot differentiate the quality. It is exactly the same experience whether I am the owner of that asset or I am leasing it, right? I think what we do sometimes is we drop the quality very quickly, saying this is for corporates and this is for non-corporate. So please don't do it. Make it look exactly the way it should be looking, grade A asset, and it'll sell like crazy, according to me. And by the way, in one BKC, the retail price is higher than 60,000 rupees a square feet, whereas a few buildings in that market are selling at 40,000. So it's a proof that you build the right quality, you get the price.
Perfect. I'll stay with you, Shobhit. The next question that people have is, like you deal with a lot of REITs, and REITs generally deal with office and commercial property. What are your thoughts on how can we develop the market, or is there any work happening on doing something similar to be able to get a new investor class in the residential sector also, and how can we make the our HNIs and not so much HNIs, the regular people, participate in the residential investment through a starter ownership structure?
Good question. World over, the largest REITs are not necessarily office REITs. In India, we've started with office because that's where you get rents. In India, whatever you guys have built as residential, it has always been for sale only, right? So you're not really looking at rental income. Nobody actually worked on rental income models. We keep comparing it for theoretical reasons, saying India real rental returns on resi is 2%. But when we genuinely start to build for rent only, like they call single family homes, multi-family homes, then the rentals will catch up to 5-6%, like the way it is in Dubai, it is in Singapore, it's in Hong Kong, it's in London. I think our focus has always been, and we've all as collective been saying that everybody should have a home and everybody should buy it. There are enough people in this world who cannot afford to buy it, right? So we have to start building for rent also, right? I think we have not yet done the policy. Last year, government representation was made. They are coming up with some policy changes. If they do, I think we will then be REIT ready in 2-3 years for resi as well. But today it is not a product, because on REIT, you have to give 90% of all your income back to your unit holders. So it's an income product, right? And if there's no income, if there's only 2% income, then nobody's going to buy it, right? It's below your FD rates. So your FD rates have to be beaten at least. Today on Brookfield yield, or now it's been 1 year for Embassy, over 1 year, they've returned nearly 8% cash in your hand, right? So if you had put $100, you've got 8 rupees back already, plus growth, plus rental appreciation. So hopefully if you hold it for 3-4 years, you are definitely going to make 15% return. So what is, that's difficult for resi at the moment. So I think we need policy change. Short answer is we need government support to get going on, and it's a bigger opportunity than office, by the way.
Correct. So we need to start a dialogue somewhere between CREDAI, someone like you, and government, and slowly in the next 3 to 4 years, if we can get a good policy, I think it will be another very good tool for investment, because I see a lot of people who have 25 lakhs, but they can't buy a house because of the stamp duty and the hassle of buying a house and the paperwork and the legal paperwork that they don't understand. So if someone can do that for them, and they just put in a unit of 25 lakhs, we'll have so many more people who wish to participate in the real estate market. That's a good thing. I want to while your presentation spoke about, I have 2 questions. Yeah, one, while your presentation spoke about data centers and industrial, and someone said that I think Shobhit, you said that industrial Bhiwandi needs to be cracked because 35% of demand is in Bhiwandi or such. Just give some more flavor to our members as to what does it take to be an industrial developer. I'm a residential developer. I wish to get into industrial. What are the things I need to look at? What are the rents in industrial? Who are my tenants there? And how do I make a business out of that?
Super. I'll try and give you a 2 minutes pitch. Look, it works very much like office. You have to buy land, get approvals, and build it. Building a shed, it's from start to end. Once you have approvals for roughly 500,000 5 lakh square feet ke liye, it will take you less than 8 months. So from what I call start of farming to end of the project, it's only a very small hold. I think the problem, and also approvals are not that big a issue. The problem is in aggregating the land, right? And for 1 acre, I met a very dear friend from Pune who's also a big developer. He bought 1 acre of land. He's buying 50. He's saying for 1 acre of land, he had 80 people come for registration, 3 of which were on charpai. Literally, charpai had to be brought. They were carried on charpai. So he's saying land aggregation is the key. And if you go wrong in pricing of the land or not being able to aggregate, you get stuck. And Bhiwandi has massive demand because Mumbai is perhaps 5 times size of Singapore, maybe more, I don't know. But it's a massive consumption center. And everything is moving online. Anuj just mentioned his parents are moving online. So your delivery is happening from a warehouse. It's not happening from a kirana store, right? तो तुमको जगह चाहिए वहाँ पे shed ही नहीं बन सकते because it's so much in the hand of, let me say, local politicians, local landowners. I wish somebody can crack that model, or you can even make money on just arbitrating land. It is so tough. And lots of people have tried. It's not that they haven't tried it. And you can easily build 3-4 million square feet in less than 3 years. And demand is coming from e-commerce, it's coming from regular commerce industry, manufacturing, light manufacturing, and of course, in Bhiwandi, soon you'll have data centers as well.
So any alternate location in Bhiwandi?
Yeah, Ahmedabad highway, but it's not yet that popular. Because I think from the Bhiwandi side, you can cover a lot of Pune, Nasik, and others. Once some highway connections are made, maybe Ahmedabad highway becomes the next destination. And of course, Navi Mumbai continues, but that's more for goods coming in from ships, right, and not really moving. So from ships, containers moving from Bombay to the rest of the country, not really moving from the container to the city, right? So I think a higher value you will get is in Bhiwandi.
So Pritam, if I can add just two quick things, I think we should get Mukesh Bhai into it. Mukesh Bhai is a large residential developer and he's getting into industrial. So, some of the challenges that he's facing, he'll be able to appropriately answer. One. Second is Pritam, Blackstone is very big on industrial and wanting to do an IPO at some stage. So you're going to see them. They bought all cargo. March, Shobhit closed this transaction, which was Embassy and Warburg sold their entire industrial portfolio to Blackstone. They are saying is anything between 5 lakh to 10 lakh square feet, if you have a warehouse, top dollar value they'll pay to be able to buy it. So this is another asset class which is becoming very institutional, just like your office, retail, and now industrial.
The best part about what I think Shobhit said is that the holding period is less than the commercial.
Exactly. And then money is also much lesser required. But I know Mukesh Bhai has been struggling. He's got into it. Mukesh Bhai?
Yeah, thank you, Anuj. I would first agree with what Shobhit said. Buying a land is the most challenging thing because it's not the money, it's the title of the land. But having said that, Bhiwandi is going under two more transition. One, quite a few godowns are unauthorized. So they have realized that they need to be in a competition, they need to be authorized and they need to find a right partner like us. So Pritamji and to others, I would recommend that there are quite a few. We have to work a little hard, but there will be opportunities available where, the lands are purchased, but the project proponent is stuck for the funds. Then we can do that. Second most important thing is one should look at tier 2 cities also and tier 3 also very well. It will be a long-term this thing. But if you believe, like Anuj and Shobhit said, if you believe in warehousing and industrial, becoming an industrial developer, and if we plan a 5 to 10 years horizon, I think visiting tier 2 and tier 3 is not a bad idea. And we are developers. Once we can catch hold of land, which is a challenge, I think the construction and the approvals and selling it is not a challenge. And the advantage of getting into the warehousing, that fast turnover, less than a year's time. And I think a lot of data is available. I know Anuj and his team also have very good data, and they have projections for next 5 to 7 to 9 years. And it's going to be better, the way in which things are becoming digitized, as Anuj rightly said. Because in residential, as he rightly said, we can't project beyond 2023. But here I have come across data which can go up to 7 to 8 years. So one has to definitely understand the data of various other cities and then get going into that. But I think it's the best thing one should get into that. That's what my learnings from this so far.
Until our shirts and pants become digitized, then we don't have to buy physical shirts and just can wear a digitized shirt. I think we require goods and we are going to consume more with urbanization happening and with more economic activity. We require everything which needs to be stored somewhere and then supplied to us. So that's obviously there. What are you modeling your lands on? Is it that the tenants are looking at a price band which works for their business model, so that then you can look at how much you can pay for land and construction and your capital. Shobhit?
So Bhiwandi is trading between, depending on the quality and the location. The lower end is at 17, 18, and the good quality is at 22, 23. So that's the bandwidth. Your construction price also sort of varies from, let's say, 1,300 rupees for the lower end to about 1,700 rupees for the higher end. So that's a given. So then whatever is left, profit plus land value, is what you have to price in.
Okay.
So it's become quite easy. There are only two variables, X and Y. You fix your margin and then the balance can go towards land.
Before I go to Rajni bhai, Shobhit, is this considered as an infrastructure funding? So we get it as a...
Yes. So industrial logistics and industrial does not come under real estate from a FDI perspective. So easy to move money, easy to get investors. It is an industrial activity.
And we can make it into a REIT also quickly.
Yes, I think they're going to be specialized REITs. So one Anuj mentioned is going to be retail. I think if not this year, by next year, we'll have REIT on industrial as well. And industrial REIT, by the way, globally are number 1. Office is number 3.
Wow, that's super, super information. Rajni bhai, over to you.
Yeah, Pritam, I think we need to work with the government for the special rules for the warehousing, because many warehousing in these Bhiwandi areas and all these things, there are a lot of unauthorized construction allowed in the no development zone is a very meager, very minimum, and there is a no affordability. So we need to have a special policy for the warehousing with the government as regard the construction in the NDZ, because all GEM is the green zone, or say this is the green zone and the FSI is not allowed. So I think that is we need to as an association.
Rajni bhai, on a lighter side, getting after illegal constructions, we are very well averse. How to get illegal?
No, but okay, you can construct, but no tenant will come.
Tenant nahi aate, because now tenants are becoming tighter because tenants are international companies, so they are not willing to take that risk, and insurance is not possible in illegal properties. So there are linked issues, I agree, but I think working with the government is also a good idea you've given. One very, moving on to the next question is, Anuj, this is to you, because you pioneered in third-party sales, as a concept, and later on companies, followed you. And we've seen the first round of third-party sales go. Everyone had this question: how is Anuj? How is ANAROCK? How is Xanadu? How is now this new company? So I think we have spent good 2 years or 2.5 years post that, and everyone's realized maybe work with you, maybe work with the other companies, and understood what they bring to the table. Our members will be interested to know how do you look at, and what are your learnings, because your learnings are equally important, from this concept that you had thought about when you started ANAROCK, and what do you think is the future for such companies, and what do we need to do to develop that further? Am I clear?
Yeah. I mean, it's an interesting question. I'll answer it in very quick 3 parts. One is, Pritam, internationally, I saw most of the large developers outsource. So I was always wondering is that why don't we outsource in India? At JLL, we didn't do residential globally. It wasn't a focus area, and hence we never got an opportunity to do it. I was also waiting for RERA to happen, and one of the prompts that I had to move out of JLL was the RERA and ability to set up residential, because it's a very large thing internationally. Second is, from a developer perspective, if you were to look at it, Pritam, acquiring land, getting approval, closing finance, designing, construction, sales and marketing, and then going towards the CRM. Sales and marketing is one of the maybe 5 or 6 functions in there. And I used to think is that just like what you are doing on the construction, on the architecture, there will be at some stage, somebody will come in and perfect the art of sales and marketing. Have we perfected it? Not at all. I think there are lots of great guys on the screen who do a much better job than us. The third is, I wanted to bring in technology. And for technology, Pritam, you need volumes. I mean, as I said, we did last year 18,000 homes. you can't do it digital and technology without getting in the volume. So that was the third thing, that you had to bring in an aggregation to be able to become more meaningful in there. And the last one, we've always realized even in JLL is that the cost has to be taken into account. It has to be a great quality service at the cost at what a local broker sells. That's what, you have to do it. And that's where we cracked it to say is that bring in the technology. It's an expertise that a developer can easily develop, but maybe the aggregation needs to happen to be able to make it more meaningful. There are lots of other focus areas that a developer needs to focus and deliver. And if this is something that you can ethically, with integrity, deliver, people don't mind doing it. There will be still a lot of people who will have that expertise and may retain it in-house. And globally also they retain it in-house, Pritam. But then outsource it. And then I'm happy that there are others who are coming in, because then it becomes a lot more institutional as a play. Otherwise, you are the only guy, against the wind. It is the same when, Pritam, we started the IPCs. At that time also, it was very difficult in the IPC, at that time, Colliers or Chesterton or, CBREs. Then it took a while. Today on the office side, if you look at it, maybe 80-85% of the transactions are done by the IPCs. My guess is over the next 5, 7, 10 years, you'll see a lot of it will be done by the institutional residential channel partners, just like it's done internationally.
So I think one of the things that I'll represent from the developer side is that we used to fear, we somewhere fear that if someone did my construction, my contractor does my construction and you do my sales, and I'm left to doing actually nothing but maybe just get the approvals. Will my existence be in challenge in the future? And if you see something similar has been now proposed by Kotak Fund along with Guardians. There's some company called Ground Force or Ground Subscribe, something like that, which basically says that they have a construction team, they have a license team, they have an architecture team, and they have a sales team. The sales will be done by Guardians, and the rest of it will be done by this combined company.
It's an interesting question, Pritam. So I'll only say one thing is, Pritam, when I left JLL, a lot of people said is, why are you not going to become a developer? You know how to sell, you know how to acquire land, you have Shobhit who's going to be able to do, you have project management team, this thing is, boss, what a developer's role is. If we were not in this business for 25 years, I may have been lured to become a developer. I've seen what you guys go through it. I have no guts. Shobhit has no guts ever to be able to do it.
I think we all have a role to play. I don't think we can replace each other. Boman said in the beginning, we have to all work together. In some cases, maybe you have to work with your competition as well, directly, to bring in more strength to the table, because these are testing times and they are here to stay. So one way to consolidate is just to work with somebody else. And we've seen this in Calcutta, we've seen it in Bangalore. Many developers and work and they play their role. So it's not that we can ever replace developer, anybody else. Architects couldn't, engineers couldn't, construction companies couldn't. This is just a brokerage firm. You cannot replace.
And then many brokers tried to do that as well. Pritam, in Delhi, in NCR, many brokers have tried to become developers, and very, very, very difficult to be ever able to do that job.
So I think very well said, Shobhit. Everyone's going to go through a transition, and with every new initiative which works for us, there is some inefficiency which you're solving. So there was a definite inefficiency in the sales and marketing, which someone like our colleague Abhishek Lodha and his team did very well. They took the sales and marketing performance of any developer to another level, and everyone started to benchmark. So definitely we used to have those times when we used to put patras outside our projects, show that customer, this is our project, and there used to be lines wanting to sign the check and give us, and we would decide, okay, not today, today is not a good day for me, you go away, tomorrow you come, 500 rupees more tomorrow. Oh, so I think those inefficiencies were there in our industry, and as the prices have stabilized, as projects have become more and more tougher, I think you guys have come in very well to fill in that efficiency which is much required, and it's going through a transition even today. I feel that some developers are going to realize that they are very good at land aggregation, like Mukesh ji was just saying, and they're not good at sales and marketing. So it doesn't mean that he cannot do business in today's time. He should be able to aggregate and get approvals. He's got a lot of money in his bank balance sheet, but he can't sell. So he will go to someone like you and help him go ahead with business. Someone can sell very well, so may not come to you, but then he may go to another person to get the land, which is happening in our DM models. That I can sell very well, but you can't, so I'll come to you. So I think it's going to be a big market, which is going to be some of everyone. I'm just going to go through some more questions because I missed some questions.
I think Dhaval is wanting to say something.
Yeah,
I'm not sure.
Dhaval is waiting.
Hi, Shobhit. I have a question for you. Why can't we, talking about the Swami Fund, why can't we really come out with a scheme? Like, I'm just giving an example of how UK market works. Is that today over there, the entire funding for construction, even partly funding for land, is being given by the banks to ensure that the entire construction is finished, and probably the projects are being sold when they're about 80% ready, and that's when they start marketing and selling. So, I mean, looking at the way now that we have RERA, now we have everything to be sold only post RERA, can we really not work out a scheme with banks where we completely, take the construction finance, finish the project without any cash flow issues, and then actually show performance? And today when we see that even if a grade A developer or a grade B or a grade C, because a product which is ready is shown, can be actually sold. So even if then, the buyer doesn't matter, it is, he's safer that at least when a building to khada hai, and what I'm seeing and I'm paying for. Can we really not work out some schemes like this?
Dhaval bhai, two things there. One, of course, I think at some point we will get there. Today, the challenge is the way we have priced our land. If we don't get interim cash flow, I think you'll never make money. I mean, so in office, it's moved very differently from the very start. So I think Resi has not done it like that. Agar humko beech mein cash flow nahi aayega, if we don't fund 40% of our construction cost through land sale, through sales of apartment, I think our IRRs will get affected a lot and your margins will evaporate. Second is, I've spoken with banks. SBI, of course, is also thinking about it. The only challenge they have is between NCLT and RERA, which takes precedence, and there is no clarity. If as long as we say, look, we are willing to fund it and the project will get finished because we have the money, but developers shouldn't go down in between, right? So they need some kind of NCLT protection, which Swami has, but nobody else in the country has, not even the banks have it. So if you can get that from the government, I'm telling you, your cost of fund will go down below 10%. It may be 8, 7, I don't know what it will be. Already one of the listed companies I met yesterday, their cost of construction finance is at 8%. Yeah. Right. So obviously you'll start to make money, but abhi to hum 12, 13 se 18 tak ja rahe hain. So it's very tough. And that's
exactly because you can have construction finance at 8, 9% or sub 7, 8%, and you can I mean the home loan only the customer can straight away get a home, so he's paying EMIs for 2 years during construction, which is getting saved.
Absolutely, I think I agree with you, but we need this protection and from the government under NCLT saying you can't drag every project down, because in most cases, I know people on the screen are now shying away from personal guarantees, but previously everything had personal guarantee involved, and therefore, everything gets pulled in. Today, that is getting better. Anyways, we are one step closer to this, but we are not ready yet.
Okay, thank you.
Pritam, I'm just mindful of time of the people.
When you're with all of you, it becomes difficult to be mindful. I'm sorry for that. And I'm glad no one is pointing it out. Now that you have, I will close the session. I think it's been over 2 hours. Thank you so much, all my panelists. Special thank you to the ANAROCK team, the backend team, Anuj, Rahul, Shobhit. Thank you for being so candid with your answers. As always, it's best to leave the session when it's at a high rather than when people are falling off. And it's close to lunchtime. So we'll look forward to more sessions like this. I think it was very informative. We'll look forward to the presentation that you made. We will disseminate that to our members, and we'll stay in touch with all of you. Thank you very much, my past presidents. Thank you very much, managing committee members of CREDAI-MCHI, for always being supportive. Thank you very much to my president for organizing this today. Thank you very much, all of you, for sparing.